May profits be upon you. Welcome to another weekly market forecast. Thank you for tuning in. And if you like what I'm doing, if you like what I'm putting out, make sure you hit the boost or the thumbs up on the video and do subscribe if you're new to the channel. All right, because you want to make sure you get direct notifications of my updates. All right, and I tend to do that during the week. Now, let's take a look at the week ahead. Let's look at the economic calendar first. Monday, Tuesday, no red folders. That means there's probably going to be some consolidation during those 2 days because of what's happening Wednesday, the CPI data. CPI data is very important, a high impact news event that could potentially reverse the markets. During those kind of events, which are like the NFP, non-farm payroll or interest rate decisions, uh, those kind of news events can turn the markets from bullish to bearish, from bearish to bullish. So you might see some consolidating in the markets uh, in the days prior to those events because those markets are waiting for decisions to be made. All right. And then they'll choose a direction in which to trend. You understand? All right. Doesn't mean you can't trade Monday and Tuesday. It just means you have to trade. If you're going to trade very carefully. A lot of traders take off those kind of days when there aren't any news drivers to juice the market. Okay, Thursday and Friday are going to be good days. These aren't the hard hitting kind of news events, but they are red folder. That means they're going to inject some good volatility Thursday and Friday. So Wednesday, Thursday, Friday are going to probably be potentially your best days to trade through next week. Now, do make sure you go and check out my video that I just put out for the week ahead for the forex markets. Okay, do make sure you go check that out. You'll see it in where you can find my contact information under this video. All right, now let's look at the S&P. The S&P I have is bearish. I mean bullish. I'm sorry, bullish. All right, and I pointed out this green line here. All right, that you see highlighted at 5,865.50. All right, this is a key level. All right, I don't trade key levels, support and resistance. I don't do that, but I notice where markets have a reaction for which levels. It just makes sense to make a note of it. You find resistance there, finds it as support. Then it breaks through, it comes back up under, doesn't break through as it acts as resistance, it acts as support here, and we are trading above that key level. All right, we see that key level sometimes in the indices, and it tends to react to it as it did here as support, and it continued higher. I'm looking for prices to go higher. I pointed out this these ascending highs here as well, actually they're descending highs as a draw on liquidity to bring price up to it. I think price is going to sweep through that into this bearish fair value gap. Now, these are old. This is old fair value that the markets can offer. And when it's old, I always tell you the same thing. It's probably going to act as a speed bump, where if this is the gap, the market will climb up towards it, react, and then go back through. All right. So that's why I call them a speed bump. So I'm thinking that we're going to continue up higher. If we look on the 4-hour, you can see that we did hit that line, that hit that high that I had pointed out last week. And on last week's video, we hit that on Thursday. We hit it. We finally got to it, and then Friday it came back to that line to take the high. I think we're going to continue higher. See how bullishly that candle closed, right? And then you see the pullback and then you see the continuation of bullishness. Look, this isn't an easy one to discern. I'm not, listen, it closed very strong on Monday, but it didn't close strong over the previous day's high. All right, it closed just above what I would consider the market structure shift here. All right, I'm looking for more bearishness, but I won't be surprised by more bullishness, but I wouldn't be surprised by a pullback. All right, a pullback into this area here between these highs. I'm looking for price to find support to go to that draw on liquidity up higher around 6,076. Got it? That is the S&P. If we look at the NASDAQ, very similar. All right. You can see the structure is in place on the daily. All right. And you can see how, you can see how price broke that high, had a break of market structure into this buy up before the strongest sell off. So I'm looking here, right? Price drives up into it, reacts to it, drives up into it a second time, and you can see on a daily closing basis where the weaker Nasdaq in relative to the S&P, it closed, did not take the high, did not make a new high like the S&P did. This is where we have the S&T here. All right, you can see on the S&P we did close higher, boop boop, but we have an S&T here. All right, what is that going to tell you? Well, I'm looking for more bullishness to come. All right, we took the bullish fair value gap here, and then pushed higher after closing below it. We disrespected that bullish fair value gap, but in spite of that, we still closed higher. Okay, I think this is going to tell us that we're going to be bullish, and we did take out that high that I had pointed out in last week's market forecast. All right, so if you made money on the indices last week, with that as your uh, profit uh, uh, profit target, you gotta holler at me, so I put it in the comment section so I can say, hey, this guy did that, and yay for him. Or this lady did that, yay for her. Okay, so I have these highs as my new goal or target for next week. All right. Just bear in mind, Trump is going to have a talk with China in regards to the tariffs and everything this week. Um, we also had better than expected jobs report on last Friday, and we have CPI data coming out this week. We can get some news drivers to push price up to these highs. I think this high, they're relative equal highs. I think that's going to be the what do you call it, the draw on liquidity to move price higher. All right, we got a little catalyst behind us. Yeah, so that's what I'm thinking. If we go to the yen, the Dow Jones. All right, Dow Jones Industrial. All right, we did not reach the target here that I talked about last week, but we did reach this target. All right, and that was achieved on Friday. Finally, all right, we took out this high and we took out that high. Those are the targets that I was looking for last week. Yay if you took them. Yay. All right, if you aim towards and achieve those goals. Okay, you see how Friday's candle closed very bullishly above the consolidation. All right, this consolidation range. Did not take out. We took out this high here. All right, I'm looking for a little bit of a pullback and then a continuation up. If price takes out this heck man, if price takes out this low here, all right, that would be my line of demarcation, right? If it takes out this line here, we're probably going to take out all of this and come back into this area of bullish, this bullish area of fair value, all right? Because this looks like these lows are going to be the draw on liquidity, but I'm thinking that price has enough to take out these highs here. All right, and that we have some momentum, bullish momentum in these markets. Yes, I do. All right. So I still holding these relative equal highs up here as the draw on liquidity to push the price higher. If we go to gold, gold's an interesting one. Gold and silver. Why? You see how bearish it is? Why is it bearish? All right. We have some tension that was relieved late last week when Trump announced that he would have a sit down with uh, the with China and hash out some kind of deal with the tariffs and all. So because there was the tension was easing, that's why you saw gold prices coming down. All right. Now, is that going to continue? Well, any good news could turn this right around. All right. Any bad news can turn this right around. Continued good news. Yeah, they hash out a deal. It's going to continue down. All right. That's the way that works. Okay. So, what I want you to take note of is on the daily, you see this bullish fair value gap? We ran right through it. All right. We ran right through it. That's because if the market is not seeking to give fair value, disrespecting fair value gap, then it is seeking liquidity. And here is the liquidity here. Boom. We have these liquidity lows here. We have buy side liquidity up top. I think we're probably going to be heading towards the sell side liquidity until the deal is made. All right. Also, excuse me. Also, if we go to the 4 hour, what do we see? It seems to be very deliberate, all right, because you can see that there is a fair value gap here, all right. There's a fair value. I got it wrong. I got it wrong. Fair value gap. Okay, all right. We got one there. We got all right. That was supposed to double up. I don't know why it didn't. All right, we got one there. We got one here. You know, that's two fair value gaps, one begetting the other, if you will. And we have the cross, the intersection of an order block here. So I like it when it intersects with a low because price tends to return to those breakout points. And I like the fact that it seems very obvious. The market wants these prices lower, right? So I'm looking for price to quite possibly in the short term push back up in order to push further down to these lows. All right, we have a volume imbalance to fill here. All right, and that's not too far off. So I'm going to mark that. I'm going to mark that low right here as one of the one of the draws on liquidity. Okay, but I do like this one as also a target. Okay, didn't mean to use that one. I think I'm using the wrong one there. Yeah, I am. Boom. All right. We'll see. We'll see. Those are lofty targets. I'm not saying we're going to hit all three of them, but I'm thinking that we have a good chance to hit one and maybe two of them. All right. We'll see how it goes. A pullback and then a push down. All right. Now, the reason why I find silver interesting because while gold was bearish, silver was bullish. Now, you understand these are correlating markets, and usually they travel in the same direction. All right. But in times of tension, like I told you, gold goes up, but silver will trail behind it. in most cases. All right. Uh, uh, but gold is more sensitive to like tariff talk and all. So uh, if I'm going to take a short in the metals, I'm going with gold. If I'm going to take a long in the metals, I'm going with silver. Do you understand that? Understand that logic? All right. I don't want to take both. I don't want to take. I'm going to take if I'm going to jump in one market, and I have to have the bullish or bearish bias in mind when I do so. Okay. Now, I had I mentioned last week this was the high that would be the draw on liquidity because of this high and this high, two relative equal highs, and that was the draw on liquidity. We reached that goal. Now, I would not be surprised at all if the market starts to fall. Yes, there's a bullish fair value gap here, but I'm thinking the chances of it pushing price higher from here is going to be iffy, iffy at best. Thinking that we may just start to pull back into the lower fair value gap here, where there is a clear uh, consolidation that could form a formidable area of support for higher prices. So this may be dragged down by, along with gold, all right, and then find its support here and then go up higher. All right, I'm not taking a buy right now in any metal because it may be a lesser safe haven, but it is still a safe haven in relative to gold, and I think it will follow gold. All right, we're already at a high here. All right, we're taking out these highs, so that might have been the target, and uh, for a liquidity, and we may be seeking an internal. We might be seeking internal range liquidity now. This one, I'll see what the reaction is once the price gets to it, but I'm thinking it's going to be this lower one. Okay. And we got one more market, and that'll be oil. And what am I looking at in oil? If we go to the weekly, what do you see? All right. I spoke about last week how we dropped hard from this buy up, a stronger sell off. All right, this creates an area of fair value, and I said we're going to work our way back up to that area of fair value. And lo and behold, this past week, we closed strong, bullish. Yes, we did. That bullish candle closed above the consolidation area, and it was very clean and it was very intentional. And I'm thinking that it'll continue its push to the area of fair value up here. And let me see, the number I'm looking at is 65.78. I'm looking at that number. All right, there's some buy to sell wicks here. I want to be careful because we're probably going to get a reaction there, but it may do something like this here. Boom, boom, boom. All right, this is what I'm looking for. All right, once we get that double top, we get a higher high, then we get that new low. Once it breaks there, I'm waiting for price to pull back into this bearish leg of structure for a high probability trade to the downside. All right, that's when I think that's going to be high probability. All right, we're going to see how price reacts once it comes into contact with this area. There is a big old daily fair value gap up in there. Uh, uh, so we got two layers, all right, two confluences of resistance there. So I'm looking for price to continue higher. Now, maybe if we get an ideal candle like a small one here for Monday and Tuesday, maybe it will come back. It'll form a bullish fair value gap. Wednesday comes back into that fair value gap and continues up higher. That would be ideal, but I'm definitely bullish in this market. Thank you for watching my video. Do not forget to hit the boost or like button, and do subscribe to my channel if you're new to it. And if you have any questions, leave them in the comment section. Thank you again. May profits be upon you.